Hello guys, good morning. In this video, I will try to show you 3 ways not to use a stop loss. So you say, for example, why? You always ask us to put a stop loss in each trade to protect you from the downside. Yes, it's always you should put stop loss. But there are 3 ways not to use a stop loss depending on your risk tolerance. And this matter of stop loss, not stop loss, depends most of the time on your risk tolerance. Now, what do you mean by risk tolerance? Just a minute. My coffee. I just wake up, so okay. Now, let's begin with the 3 ways to trade or to invest. First, we have day trading. Second, we have swing trading. And third, we have investing. So we try to see these 3 ways according to each type of trading. Now, day trading. After you plan for the trade, okay, you see when you enter, it means when you buy. Let's say you are a day trader in the morning and you see an opportunity, okay, all the market is going up or there are good news and you see all the market beginning at 9:30, it begins to go up. So you have some stocks on your list and you see one which is strong and you decide to buy, okay? Now, when you decide to buy, the stop loss is always there in your mind. Okay? In your mind. You calculate it. You calculate this stop loss before you even buy the stock. Not after. Okay? So, here you are not using a stop loss as physical. It means you don't buy the stock and go and put stop loss in physical. It means you put the order and it is there. No. But it is in your mind. Let's say you buy a stock. It's just an example, okay? You buy a stock at $10 and you say, okay, I should buy this stock right now. It is $10 right now. The price is $10. I am buying 100 shares. What is my risk? Okay? Let's say this stock is volatile. You say, I will risk 10% or 5%, whatever you want. Let's say 10%. 10% is when the stock goes to $9. 5%, $9.50. It's like this. So, each trader is different. It's just because there are a lot of things included in this stop loss. It's not just the stock itself. Okay? It is mainly the first main reason is your risk tolerance. Not each trader, 2 traders, they do the same stop loss. Now why? Because of your risk. Someone likes to risk more and you, for example, you don't want to risk more. And this is a problem, okay? So if you bring, for example, if you bring 100 traders and you give them a stock, let's say a stock is $10, you tell them, okay, you are buying 100 shares, it means one lot, 100 shares of this stock, and you give 100 traders, you give them $1,000 to buy this stock, and I ask them, when you put stop loss, they will be all different. Some who use technical analysis, they can have some of them. They can have the same because they use some type of technical analysis ways to put stop loss. Now, the thing is, you should put a number in your mind because this number, when it reaches this number, you go and you put the order and you execute it by what we call a stop order. You just go and put it. when you think that you lose the trade. And this is how most of the professional traders do, day traders. Okay? Some who have many positions, they put stop loss. In actual put stop, they put it because they can't. They can't just oversee a lot of stocks at the same time. Okay? Now, if other people have only one stock, for example, they do day trading, they don't have that much money, so you can use what we call a stop loss, but it is only in your mind. Okay, your mind, it means you set the stop loss, you know when you exit. And this is the difference between a beginner and a professional trader. A professional trader knows when to exit. A beginner doesn't know, and he leaves his trade to feelings. Let's say the stock, a professional trader say, okay, I'm giving 50 cents to this stock. Because sometimes when, at the beginning of the day, some good days, the stock goes down a little bit. You think that the market is going down, and then we have a reversal, and you will see that it is a very, very nice day. These techniques, you can study them in day trading. Okay? Now, this, as I told you, is in your mind. So you can open a position like $10 a stock. You buy 100 or 200 or 300, but you should know what is your risk tolerance. When, if the stock reached that price, you must leave. You must exit. Okay? It's very hard, I know, for beginners to use this, what you call mind stop loss. It means you say, I will buy, if it reaches that price, I will sell. But believe me, since you are a beginner, and most of the people who are like watching are beginners, it's really hard. For example, you bought the stock at $10, you say $9.50, I am out. I will lose $50 for this. This is my risk. $50 for this trade. Okay? Now, let's say the stock begins to go up in that day, okay? You are happy. It begins to go 10, 5 cents, 10, 20 cents. And then suddenly the stock will go down. It goes to $10, then $9.80, then $9.70, and it's going down. Now, it's going down, it means that you begin to lose money, and you begin to think about your stop loss that you set in your mind before. It's not set as physical, you send the order to exchange. No, you didn't do this on your account, but it is in your head. That you say, okay, if the stock reaches $9.50, I am out. Now, if you are a beginner, this is a problem. When the stock reaches $9.50, you tell to yourself, no, I am not selling. I have lost a lot. Maybe the stock after 1 hour, 2 hours, it goes up. Now here is the biggest problem of what we call psychological problems. You can't be logical. You let hope and feelings interfere into your business. And then you say to yourself, no, the stock will go up. It's just because you want to make you right. Because later, if the stock goes up again to $10 or to, oh, you say, yes, I know that the stock will go up. Okay. Now, if the stock doesn't go with your hope, it means the market is against you. Then $9.50, you don't sell. $9.40, $9.30, $9 or less. It means the stock you will never know where the stock goes. Okay, even if the stock market, all the stock market is good, okay, even the stock market is good, you don't know that stock what will happen to it. Okay, don't think that all the stocks will go up in a good day. Some they go down. Okay, now when you reach 950 and you don't sell according to your stop loss in your mind, what will happen? You will lose more money. Instead of losing $50, you can lose 100, you can lose 200, you can lose 300, depending on the stock. If you continue doing this, I assure you, according to my experience, you will never make it as a trader. Never. You can stay 6 months, 1 year, 2 years, 10 years trading, but you are always losing money because of your problems. It's a problem not to be disciplined. Okay? Even if you don't use a stop loss like physical, you put it in your account. You go and you put stop loss like $9.50. You put it, and if the stock goes down, you exit. Okay? Even if you don't put it as physical, it is always in your mind. But if you let your psychological problems going inside your trade, here you are out of business. It means you stay 6 months, 1 year, 2 years free, but believe me, each year you will see your account losing money. Okay? So try it. Try to put a stop loss in your mind, and if you are doing day trading, and try it and see if you are disciplined. Now, if you are disciplined, your future will be brighter and you will succeed in doing business of trading, or what you call day trading. Okay? This is about day trading. Now let's go to swing trading. Swing trading is you buy today and you hold for overnight, and either you sell tomorrow, or you sell after a few days, or after a few weeks, or after a few months, depending on the stock, depending on the trend. Okay? Now, in swing trading, if you don't put a stop loss, okay, and you don't have any stop loss in your mind, you don't. Now, what does it mean? It means that you will take 100% risk of the market to your trade. Now, what does it mean that? I have shown you an example before of Twitter. I was in a trade that day. The stock, it was like 52 or 55. I was in many days. And I put my stop loss. Now, in the day, it's okay. I see the stock goes $1 or $2 down, which it doesn't reach my stop loss, so I am okay. I see it in my account, it's good. Now, I was working something else, and then around 3 o'clock, I don't find the Twitter in my account. I say, well, where's my Twitter? Okay, I bought, I don't say how many I bought. Okay, I don't find it. I was astonished. Now, when I see the chart, I see that the stock has gone $14 down. Do you understand? Because the people, when they say stop loss, you use it or you don't use it, they don't understand. If you get hit with that, you will have what we call a big loss. If you have a big loss, like 10%, 20%, 30% in your trade, you will never make it as a trader. But do I say, oh, I was lucky because I just $1 or $2, I exit, I was lucky? No. For me, I am not lucky. Okay? I am just disciplined. And if I preserve my money, if this trade is bad, it means I lose this trade. I don't care. I do another trade. But the thing is, I have money to do another trade for 10 years, 20 years, or 30 years until I die. Okay, let's assume this. It means I continue to try to trade. Now, why? Because I have money. Now, let's do the other thing. Now, you can not to use a stop loss in swing trading also. You can. No one stops you. It means one of the guys who are just beginners send me an email. I say, oh, why you are always trying to oblige us to put stop loss. Oh, when I put stop loss, I lose money. Okay. First, I don't oblige anyone to do anything, because I am not your father or your mother or your parents or your teacher or your someone authority on you. You are an adult. You do whatever you want with the money. For me, the only thing I'm doing, I'm just explaining you things in order to help protect your money from the market. Because when the market takes your money, you don't send them an email and you say, oh, I do mistake. I have put stop loss, but I forgot to put it. Okay? Just give me some of my money. Because the trade in Twitter, everybody, I'm telling you the truth, everybody who was in Twitter that day and he or she did not put stop loss, believe me, he will lose this $14 a day. It is a catastrophe to lose $1,400. Okay? It's too much as money in one trade. And you don't have that much money you put in your trade. So, if you accept to not use a stop loss, what does it mean for you? Not for me, for you. What does it mean? It means you say to the Mr. Market, I am not scared of you. Okay? Mr. Market, either you go up or you go down, I don't care. You can take from my money whatever you want, or you can give me as much as you can of money, and I don't care. I don't care both ways. But it's just you be happy when the market gives you money, and you will be sad or unhappy when the market took your money. Okay? So in swing trading, you can also put what we call a stop loss in your mind. But the problem is that here we have problem with swing trading. Swing trading, most of the people, they do it. Most of the people, not all. Let's say you have a day job. Okay? You have a day job. And you are working, so you can't just go and check your stock at any time. You can't. It's very hard. So the solution for that, you can use. There are some brokers who have texting, message texting, or an alert to your email or something when the price reach that. I think it's some they put it as free, some put it as you pay money, so I don't know exactly. So for you, if you can have this service, especially when it's free, if you say, okay, I bought a stock, let's say for swing trading, the stock is $10. Now, if you are staying too long, let's say your stop loss is $9, okay, 10%, because you want. Now, you say to yourself, if the stock goes to $9, I am selling my position. But you wait many days, and then you will see. You can use as a solution, you can use this service. I think it's a free service, or there are some websites that give you free alert when you put a price or something like that. You search this online. Okay, some they have from their broker, some they put money for it. They say subscribe to use these alerts. It's a lot of things online right now. If you don't want to put stop loss in swing trading, you can use these alerts, email alert, and it says to you, oh, your stock is $9. You should sell. You go to your account, maybe at lunchtime or break or something. You go to your account online with a cell phone and then you exit the trade. This is a solution. Or you don't want to exit at all until you decide when to exit. Okay, this is for swing trading. Now let's go to investing. In investing, in general, you will never use a stop loss. Now, why you will never use a stop loss? Because it is an investment for the long run. You say to yourself, and especially when we have tax implication, you understand that when you hold the stock more than 1 year, if you make money, the tax will be less than if you hold it less than 1 year. Okay, this is the difference between swing trading and investing. This is the difference. When you have more than 1 year and you stay longer and longer, even if you sell your stock later, so the tax implication will be less. It means the government will not tax you, or the IRS will not tax you that much. You should ask an accountant to tell you the exact tax if you have a lot of money and you are moving a lot of money. Okay? Now, investing, it means you choose one company or two or three, or whatever you choose, and you know the fundamentals, you know this company, and you are following your investment. It means you are very, very interested in this company and you are buying each time. This is called investment. In this, you should need to stay longer. So when the stock goes up $2 or $3, it goes down $4 or $5 or $6, you don't care that much. What you care about is at the end of the year, and you will see yourself, have you made money or you lost money? Okay? That's why you don't need to use a stop loss. But understand that investing, there is a big risk also. I give you an example. Let's say you bought Twitter last year at $74.73. Let's say you see a stock like last year or the other year, Twitter. I have made a lot of videos, and you see it's going from $42, it goes to $74. It nearly doubled in 2 months. Okay? And you tell, this is the stock that I want. Now, when it was 74, it was going up so powerful, you buy stock. And you stay 1 year. You see now it is $18 or $19 or $17. You see how when you are wrong in your investment, how much money you lose? You will lose a lot of money. Okay? That's why some people who are advising for investing, they say you should not use only one stock. You can use many stocks, 2 or 3 or 4 or 5, just to spread the risk, not to be hit in one time. Okay? So here in investing, you should not use a stop loss, and you should use what we call a decision. A decision, you tell yourself, okay, if in 1 year this stock doesn't make money, I will sell it. Like the mutual funds do. The mutual funds always, they buy stocks, they wait 1 year, or more, and then they decide to keep the stock or to sell it. And that's why they do big movements in the market when they sell these stocks. That's why you see stock going good, and one day it goes like a rocket down. Okay, this is because of sell-off of these guys, mutual funds. Okay, now thank you very much for watching. Hope you understood this 3 tips on not to use the stop loss. I give you the 3 tips. I give you the problem. I give you the solution, what to do, and I give you the risk. Okay? Always, anything you do in trading has to do with risk. You should know your risk tolerance. You should know how much you will lose and you'll stop. Okay? You should know this, and you develop it through years. Okay, years of experience of buying. For those who have not a good idea about how to use a stop loss or how to follow the uptrend, you can use my training as always. You just take a look. If you like it, you order it, and you just learn. And then, if you have more questions, the email is always there. You just send me an email with any problem or anything. So, because the sole reason I am explaining this is just to help you out, because a lot of people, when it is done, when they lose all their money, okay, in the market, 1 year, 2 years, they lose everything they have, and then they contact me. I say, okay, but now you don't have money to trade, because before you just trade, you don't stop, you don't see yourself, you don't learn, and this is a real problem in the stock market. So you should at least stop a moment, stop trading, and look at what you have done. Is it good or bad? If it is bad and most of your trades are big losses, or you don't know even if it is a big loss, or you don't or small loss, it means that your risk, you don't understand your risk tolerance. You don't know what you are doing. You just enter a trade and you buy and you sell. At the end of the year, you lose 50% of your money in your account, or 40% or 30%, and you say it's the market. Okay? It is not the market. It's you who lost the money. It's not the market. The market doesn't lose money. The market is a combination of people. Some, they make money, others, they lose money. That's it. But there is no the market that lost. You see in Wall Street, when they speak about the market lost money, it means the investors who are losers, they lose money, they lose too much money, and they say the market. But it's not really the market, because those money that was lost, it is gained by others. Okay? So understand, the money is just moving from hand to another hand. Okay? It's always there, the money, but it just moved. So there is no, when we say, oh, the market today lost, the Dow lost 1%. No, who lost 1%? It's the investors. Okay? But those people who short or do some stuff, okay, they make money. So the money moves between hands. And this is the market from centuries ago, or since centuries ago, to now. It's the same market. Stocks go up, stocks go down. Industries go up, industries go down. Some companies become famous, some they go bankrupt, some they are small, they become big, some companies are big, become small, some stocks they get listed into a stock market like an IPO, others they get enlisted. It's the cycle of the life of the stock market. It's the same. Even the people who are in the stock market, they are the same. They are losers and winners, always. There is no one who is in the middle. You find a loser and a winner. Always. Centuries ago to now, it's the same thing. Even the technology doesn't help nothing, because our problems is psychological problems. Okay? Psychological. You don't know what you are doing. You don't know your risk. You just, oh, buy here, sell here, buy here, sell here. By the end of the year, you lose all your money or half or whatever. And then you say, oh, it's the market. No, it's not the market. It's you. So it's high time. It's high time to stop trading. Look at what you have done. If you have problems, I have made all kind of training to fit your needs. It means whether stop loss or how to follow a trend or other things. And just try to learn a new thing and try to stop losing that much money. Okay? So thank you very much and have a nice day.